Hey everyone, Zachary Jensen here, managing partner at TaxWise Financial Services, where we are empowering small business owners to maximize tax savings and grow with confidence. Today, we're going to be talking about real estate professional status. What is it? How to qualify for it? This is going to be a comprehensive video on it. So I hope you're ready. There's going to be a lot of value for you in this video. First, I want to go over why real estate professional status matters. So, real estate professional status can be a game changing tax strategy for high income professionals who are active in real estate investing. So, by qualifying for real estate professional status, taxpayers can reclassify rental losses, usually that are considered passive, against active income like wages from a W 2 job or business income. This reclassification can significantly reduce tax liabilities, sometimes even to zero. So, people pay no taxes doing this strategy. I kid you not, we have some clients that are doing exactly that by offsetting taxable income with depreciation and other rental expenses. However, qualifying for real estate professional status is not as simple as it sounds, and failing to meet the IRS rules can result in severe financial penalties, back taxes, and interest. So, this can lead to a lot of audits, unfortunately, for folks that are not doing it properly. So, for real estate investors, real estate professional status represents a tremendous opportunity to supercharge their tax savings, but the rules to qualify are specific and stringent. So, this guide will take you step by step through the three main requirements to qualify for real estate professional. Number one, the 750-hour rule. Number two, the greater than half of professional time rule. And number three, the material participation rule. So understanding and documenting these requirements thoroughly is critical for claiming the real estate professional status. So let's go one by one and get you all the information you need to know. The 750-hour rule is what actually counts as real estate work. So the 750-hour rule is the foundational requirement to qualify for real estate professional status. Under this rule, you or your spouse, if you're filing jointly, must spend at least 750 hours annually working in real estate properties, trades, or businesses. So importantly, these hours must be work hours, not hours spent on investment-related activities. So the IRS clearly defines activities that count towards the 750-hour requirement. Number one, development and redevelopment work, construction, acquisition, operations, rental and leasing, brokerage work. So any of these kind of real estate jobs, that's what the IRS defines as real estate work. Now, if you're not a real estate agent or developer, operation and management is the area that most of our investors who have high earning W 2s and spouses that are kind of spending more time at home can qualify for. So, just as a heads up, that's usually the one folks go with. These are hands on operational activities where you're actively working to maintain, improve, or manage your real estate. For instance, showing the property to tenants, right? Signing leases and collecting rents, coordinating repairs and performing maintenance, renovations, right? Any sort of research for potential real estate deals. That one can get some folks in trouble because they log in their time log, oh, I'm just researching. The researching needs to be paired with other activities. Commuting to and from the property, attending education and seminars and webinars, again, another area that can get people in trouble, but if it's paired with other activities, should be fine. So the distinction between active and passive work is critical. This is where many taxpayers fall short and inadvertently disqualify themselves from real estate professional status. So how do we actually track and document the hours? The IRS will expect detailed records for your hours if you're ever audited. So keeping a logbook or using a software to document the following items. So number one, specific activities performed. Number two, the date and time spent on each activity. And number three, the property or business related to the work. So for our clients, we share a logbook that is just an Excel sheet that goes into detail what items count and what don't and how to log it. So if you ever need that, even if you're not a client, feel free to reach out and share it with you. This meticulous tracking ensures that your 750-hour threshold is met and you have a defensible documentation. So if you're an employee, hours worked as an employee do not count towards real estate professional. So if you worked at a construction company as a W-2, those would not count. So just want to clarify that. It only counts if you own at least 5% of the business in which you're employed. So let's move on to rule number two here, greater than half of professional time rule. The second requirement for real estate professional is that you must spend more time in real estate than any other professional activity during the year. This is known as the greater than half professional time rule. For example, if you're a high earning doctor or lawyer and you spend 1,500 hours a year annually in your profession, you need to dedicate at least 1,501 hours to real estate work to qualify for real estate professional. This is what makes real estate professional so hard to qualify for. And honestly, I've only seen one tax court case where someone had a W-2 and the IRS allowed them to do real estate professional status. In general, you do not want to try to get this for yourself if you have a W-2, but you can try to get it for your spouse. So, given the difficulty of meeting this rule while holding a full-time professional job, many households use a spouse to qualify for real estate professional. For instance, a physician working full-time and earning significant income. The spouse manages the rental portfolio and meets the 750-hour requirement. Since they file jointly and the spouse qualifies, this approach allows the couple to leverage real estate professional status while still benefiting from the income of the other spouse. So let's move on to rule number 3, material participation. So this is different than the 750 hours, right? This is a separate test, so it gets kind of confusing. The third requirement is that you must materially participate in your rental activities. Unlike the 750-hour rule, material participation applies to each rental property or business you own unless you file what's called a group election, which we can walk you through the pros and cons of if you are a client. But you're going to want to make sure you get that part right because the IRS uses 7 different tests to determine material participation. You only need to meet one of them, but the main ones I'll go over for you now, which are number 1, you worked more than 500 hours on the property during the year. Number 2, your participation was the only participation in the activity, so not even maids or handymen, you were doing all the work. Or number 3, you worked more than 100 hours and participated more than anyone else. And then there are other tests, but they're less common. Then we have the grouping election. So if you own multiple properties, meeting the material participation rules can be very challenging. Fortunately, the IRS allows you to make a grouping election to treat all your properties as a single activity. So you can imagine if you had 3 rental properties, doing 500 hours per property per year is not very realistic. So you can group all of those as actually one activity, and then you just need to meet it, the 500-hour test once, if you were going for that test, for example. This simplifies compliance, but also means you must meet the material participation requirements across the entire group. So still got to hit the test. So an example of qualifying for reps here. So let's illustrate this with an example. Sarah and John, let's call them, file taxes jointly. John is a high-income surgeon earning $500,000 annually. Sarah manages the rental real estate portfolio. Sarah spends 750 hours managing 10 rental properties, performing tasks like maintenance, leasing, and bookkeeping. She meets the 750-hour requirement and spends more time on real estate than any other professional activity. Sarah also qualifies for material participation by managing the properties without hiring a property manager. Because Sarah qualifies for reps, the couple can use up $200,000 of depreciation losses from the real estate investments to offset John's income, significantly reducing their tax bill. So that $200,000, just pulled it out of thin air as an example, but we have clients that have actually done this exact thing and have reduced their taxes down to 0. So now I'd like to go over, is real estate professional worth it? It really depends. If you're a high income professional, achieving real estate professional status can unlock massive tax savings for you that you can use depreciation and rental losses to offset your very high tax W-2 income. While the rules are strict, right? You need 750 hours, professional time dominance, and material participation. These benefits are substantial. But also getting it wrong and doing the status improperly can lead to substantial issues in audit. So you're going to want to make sure you're doing it properly. For those that actually can't meet the reps requirement, there's something else called the short-term rental loophole, which is just as powerful, but it requires you to be in the short-term rental business. So that might be something you might want to explore. But for real estate professional status, you're going to need meticulous documentation, clear understanding of IRS rules, and that way you can avoid those costly audits I mentioned. So if you're considering real estate professional status, consider reaching out to us. We might be able to help you. We specialize in working with real estate investors, so this is our bread and butter. We have clients, as I mentioned earlier, doing this all day long. So thank you so much for watching this video. I really appreciate your time, and hopefully we'll chat soon. All of our information is down in the description below. Thank you so much.